is Griffin.
My tummy hurts. Pretty good, right back. Hey guys, what's going on? Nick without the chart trading. I will be doing tonight's video for Tuesday the 8th. Sorry there was no video yesterday, but Brett had to have a surgery, so he is out. Not sure if there'll be one on Friday, but myself and Ed will probably do it obviously for the rest of this week, so at least there'll be something to watch when you're bored laying in bed or taking a poo whenever you decide to watch these videos. But yeah, anyway, let's just dive right into it. Pretty interesting day, to be honest. Started a little weak, then we had that nice movement midday. Really felt like there was a big reversal. I don't know, honestly, what it was off. Around that time is when the news came out about Ukraine not really pushing to be part of NATO at the moment. To me, that didn't really make sense for us to move the way we did. I mean, the Dow was down like a couple hundred points and then ended up shooting up to being up like 300, and then the NQ was down like 150 and then it was up like 200. So it was quite the reversal. And we'll take a look at it on the smaller time frames when we look at the internal screen, because I think obviously it's easier to see it on a smaller time frame than a weekly or monthly or the daily. So we'll take a look. I just wanted to, I guess, do a quick recap on the indexes from the higher time frames to the daily, and just kind of see where we're at, because it's nothing really has changed too much since last week when I did the video. I mean, we're still in that downtrend. It still looks pretty bad. When I was looking at it, and like I said, just using my color-coded candles, you know, you can 1, 2, 3, 4, 5, 6. So 6 weeks under the 34, and 1, 2. I guess we could not count that one because it did close above the 34. But we'll say 3, 4, 5, 6, 7. So now a longer period of time under the 34. And also, I think probably the closest time, and I've been saying this ever since this kind of volatility started, that it didn't feel like COVID lows that are back in February, March. This felt more like 2018 when everything was getting hit. And as you can see, even though it's a bit of a mixed bag, kind of feels very similar. And obviously the Fed's what caused it back then. And, you know, now we have Ukraine and some other stuff, but realistically, the Fed's kind of what started this. Which to me is not too surprising because we knew about this all. But I guess as you get closer to the destination, it becomes more of a, you know, a reality. But weekly looks horrible. At this rate, it looks like we're going to keep doing this, almost like the symmetry here, where we get that one good day, looks like we might break, and then we end up going lower. Have that one really good day, looks like we're going to potentially go higher and break. So if that type of, you know, stair-stepping lower pattern plays out, you know, as looking at a weekly chart here, whether we take out the lows this week or next, it looks like it's building out to that. On the flip side, I wouldn't be too surprised if we stay in somewhat of a channel. Mainly because I don't think anybody, whether people think it's going to go a lot lower or we get this decent size rally, we're getting pretty close to the Fed, which I think it is on Wednesday or Tuesday of next week. I can't remember, so I'm just going to say it's a week away. I think it's the 16th. I can't remember off the top of my head, and I don't feel like looking at it while I'm doing the video, but you guys can check. But and if you remember, obviously we'll have that on the site under calendar when you first sign in. But anyway, middle of next week, Fed decision, Fed minutes, yada, 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 FOMC. But I think that's what the market might wait for. So I wouldn't be shocked if we maybe do come up to the 8 and then, you know, just do this kind of zigzag pattern leading up to that, because, you know, you don't want to kill the market unless obviously you're trying to buy it back up, but you don't want to continue lower and then get surprised and then, you know, you try to short it and then, you know, they say we're not going to raise because we don't feel that the, you know, even though with oil at freaking 120 something dollars a barrel and, you know, everything going on, and inflation's probably even crazier now because of that, with the whole uncertainty with Ukraine and potentially being dragged into, you know, we don't feel that it's currently right. I still think they're going to, I think if Ukraine wasn't an issue, I think they would have raised 0.5. I'm like 85-90% sure of that, but the fact that there is more uncertainty now, I'm like 80 to 90% sure that they will still raise, but they'll probably start it at 0.25, and I think that will be taken as a bullish thing. I think what they say is more important than what the rate is. If they did 0.5 to shock the system, but they say they think that's going to be it for a little while, that would be bullish. If they start with 0.25 and they don't really act like they're going to be super aggressive, that would be bullish. So I think it's once the rip the band-aid off of knowing the exact rate increase, I think it's going to be more important what they say, and try to, obviously when they have a Q&A, if they have one, try to find out what the pattern is and stuff like that. But it's kind of like they said, it's just data dependent and going with the flow of things. But obviously with global affairs and stuff, who knows how this will all play out. I mean, like I said, if it gets progressively bad, I think we do come down to at least a 21, which we're not that far. I mean, what's 100 points from exactly where we're at right now? We do that sometimes in a day, up, down 60, 80 points. What's another 100-point drop? And seeing if we find support there outside of COVID lows and a little bit on once again March, or not March, excuse me, the end of 2018. So I guess that's probably December. Having those lows going into the end of the year. We've been up, and you can see that in the screen. What color do you see more of? Green. It's like 90% green. So, and then when we do have any type of drops, they're not more than a couple months. 3 months. Here we are at 2 months. So we'll see. I was expecting us to go into this year with a bit of volatility, and I figured it would be that way till this time. And here we are coming up, next week with that decision. Once we get a clearer picture, and if Ukraine, who knows? That's the thing, and that's the thing. It's unfortunate, especially as a directional trader, to say, you know what? Yeah, there is a case that we go down to 4,000 or 3,800 or whatever the case may be because of X, Y, and Z. And if oil does go to 180 or 200 and it gets worse, and Russia, it does drag in a NATO country, that type of thought process going from A to B to C to D and so forth. Yeah, when you start thinking of the amount of, I don't want to say negativity, but FUD, whatever you want to call it, that could drop us, it's fairly easy to come up with a case for us to drop another 300, 400, 500 points and be down, from an all-time high of being down 30% or whatever the case may be. ES is holding up actually fairly well, all things considered. I think it's only down about 11%, give or take, from all-time highs, which, once again, under the hood, I talked about that in the room today, is the market is like, from the outside, it looks amazing. It's like it just, a nice new paint job. It's a car, super nice, super clean, and then you open the door and it's just horrible. It's like an episode of Hoarders, and you open up the hood and there's no engine. Like it's just trash. So, looks can be, deceiving because anybody who doesn't follow the markets might not really be aware of what's really going on. And when you hear, like, I don't know what it is now, it's probably 3/4. It was 2/3. It might be 3/4 by now. The NASDAQ stocks, are at their 52-week lows or below their 200 and stuff. So it's really just Apple and Microsoft and a few other ones that have not been hit that hard that are keeping us up like this. And like I said, to the average person, they might feel it a little bit, but if they're not in, index specific plays, like, just buying the SPY or the Qs or, mutual funds or whatever, if it's very specific stocks, then definitely they're feeling it with, some big names like Shop down to 500 from 1,800 and PayPal from over 300 to $90 today, $92. Facebook from, almost $400 a share down to under 200. I mean, a lot of big names have been hit 50, 60, 70%. And God forbid they're not big names and they don't make money. They're down 70, 80, 90%. So people talk about a bear market, and I guess it depends on what side and what you consider, yourself. If you're a value investor, then maybe you think everything's really not that bad, being down 10, 15, 20%. If you're a growth investor, you're down 60, 70, 80%, depending on when you bought your stock. So I think there will be a transition. Obviously, it's when, not if. But speaking of that, let's switch, because overall the Russell, I feel, outperformed, even though it got a little sloppy into the close. And we do have that daily squeeze. Momentum shifting a little lower, but obviously has not fired, and it's been in a squeeze for an entire month now. Russell looks bad like all the other ones, but I will say there was relative strength today when the Dow, I think, was down 200 something points. You had the Russell up a good amount. I think it was like 10, 15 points. So not a crazy difference, but every other index was red by a decent amount, down, 0.5%, 1%. and then you have the Russell up, half a point or whatever the case may be. And at the highs, I think it was up over 2.5%, where everything else was barely up 1%. So there was relative strength. A lot of the stuff I'm in might not necessarily be in the Russell, but it is a small cap. Some of it is in the Nasdaq, but they're all under. Most of them are under 50 billion, 40 billion market cap. Some of these newer SPAC ones are 500 million now or a billion. So I kind of focus on the Russell because even though some of the names I'm in might not necessarily be in it, it will trade similar. So I actually had a fairly solid day for my account, even despite that pretty decent sell-off into the close, mainly because, like I said, the Russell and the small caps held up better than any of the other stuff. So is that a transition? Because I will say Russell was from back over here, November time, we started seeing some relative weakness in, small caps, and we didn't really start feeling it in the bigger stuff until the beginning of the year. We had maybe that first week of January where everything was looking okay, and then obviously the trapdoor hit, and we had continuation. But you can see that the Russell led us by almost a month and a half, giving us kind of an early warning of what was going to happen. So they say sometimes small caps will lead us down, but they'll be the first ones to bring us back up. So will we see a continuation of that? Maybe it's a one-day event. I'm not 100% sure. Maybe it's short covering because a lot of the names were up 20, 30, 40, 50% on the day out of nowhere with no specific news. And since, like I said, 80, 90% of my portfolio is in that type of stuff, I thought it was quite interesting to see that type of price action in those names. So something to obviously keep an eye on. And hopefully for me, it's not a one-day event. NQ definitely a little weaker. Did break below its, and this is obviously the monthly chart, so we still have over 2 weeks, 2.5 weeks left of this month. So this could easily close above its 21. But if you remember from, probably videos from about almost a month ago, sometime early mid-February, this is what I was talking about, at least trying to see. And sure enough, we broke it, but we did end up closing higher. So I was thinking that there was a potential that was good enough, because that's just typically how the markets have been. You have, if there is a bad couple weeks, it doesn't last that long. You find a decent level of support wherever it may be on the bigger time frames, and we bounce. Kind of like over here, a couple days, a little uncertainty, we bounce. A couple days, bounce. A couple days, bounce. Sideways, a little chop. We're bonking. We can't get new highs, and then here we go. Beginning of the year, literally just straight down. So NQ's, I think, down with the Russell. They're both about 20%, 21%, give or take. And that me giving you that data was from earlier in the day, so I don't know if that flush into the close really made much of a difference. But I think both the Russell, so small caps and tech stocks, NQ, the Nasdaq, are officially in bear markets as of right now. And once again, when you hear of something being down 20%, it's not that bad. But when you have 70% of what makes those indexes down significantly, depending on how you are weighed, if you just buy the Qs, you might not feel it as bad. But if you're in some of these, not any of the big FANG names or $1 trillion market cap companies, then you're definitely feeling it. Like I gave some names earlier that were getting hit. So NQ definitely weakened. Like you can see, it looks like there's a good chance that we will retest those lows unless either a sideways action until the Fed decision. If they shoot like 0.5 and they still seem hawkish, then yeah, I think we could easily continue lower. 12,000's on the table, 10,000's on the table. Obviously, it will be a buying opportunity. It always is, but it does suck in the meantime not knowing where the floor is in, and I would not feel comfortable saying any type of floor is in right now. I will say if, PayPal's at like a 3 or 4 year low, maybe not a bad time to nibble. Shop was an $1,800 stock. Now it's $500. They're growing. Everything's looking pretty good. Just because they're not, having cash coming out of every, nook and cranny at their headquarters doesn't mean that they're a bad company, that they won't rebound. So in these types of, situations, when everyone's running for the exit, you typically want to do the opposite and either have a list of stocks you like and have strong conviction and either start a position or average down. Make sure you don't overextend yourself heavy in margin, or you do full positions, because it can always go lower. Not that we really look at it often, but see how the Dow's doing. That, like I said last week, that squeeze it's been in since August of last year, so 6 months, 7 months, ended up firing short after that, and then we'll see how that ends up playing out. Obviously, most of the indexes have a very similar pattern Dow's held up fairly well, all things considered. Once again, mainly because it does have a lot of the bigger names that do make a lot of money and that are strong market caps. You can see it's still respecting its 21 right here, so we'll just have to see. But when you look at that daily, you can just kind of visualize that, unless we get some nice follow through from them more than just one day, it looks like there's strong probability of going lower. Let's take a look at the internals. Like I said, I don't know, this one caught me off guard. This didn't feel like algos or it didn't really feel like much short covering, even though it was pretty quick. Mainly because of the information. Like, I don't think, like what I said earlier with the whole Ukraine thing with NATO, it was around that time. It didn't really make much sense to me. Like, are we really, and these candle sizes really aren't doing the move justice, but, to go from 30, we'll say back over here before it really started, 30 to 600 all the way up to, 33,400 basically. Like, that's a fairly significant move. And obviously it came back down, we came back up, and then kind of got weak into the close, basically going out near the lows of the day and everything. So we'll just have to see. I was expecting it to maintain at least half back on my profile. A lot of these indexes, mainly obviously off the ES, because when I'm looking at my profile, it's on the ES 95% of the time. I was expecting after that type of move that there would be some type of either sideways action or continuation, and as per usual, when we do end up seeing nice moves, they are typically sold into. So you just have to be careful. Once again, going back to what I was saying, very long time, outlook. You're going out 6 months, a year. You're buying shares of companies you like, and you're just going with, the ebbs and flows of the market, or you're day trading this and you're taking advantage of these big moves, and then obviously not overstaying your welcome, because, you go long here and you're like, oh, this is amazing. And then I'm going to go, do whatever. And then you come back and it's the end of the day thinking that it kept doing this. You just gave back all your profits, and I guarantee if you did calls that expire, the same day or this week, you're not even up. You're probably down, especially after that type of move down. What was I gonna say? But overall, not that bad. I mean, breath ratios were positive on the day. The VIX didn't. What was it getting up to? I think it was like 30. I think it was over 36. I don't know. I guess because it's not going back. But the VIX was over 36 today. So something to, or was it? Maybe it was. I don't know. Let's see. Will it show if I maximize it? Yeah, I was just going to say, I'm like, I could have sworn it was higher. Like, yeah, so 37, 52 was the high. And it dropped pretty, when we had that massive move I showed you, we did drop quite a bit. And then here you are going back above 35. So anytime we get, when you're talking the VIX at 30, 35, 40, that's one way of extreme fear in the markets. And then obviously cross-referencing the put call ratio and the trend, and just getting an idea of, is it, if everyone's bearish, there's only so many more days of bearish action. You will get that, relief rally, and vice versa. If it's just straight up, and the VIX is dropping back down to 10 or 12 or whatever, you will get, obviously some selling. So just playing those ebbs and flows and the extremes of those moves. But put call base, I'm going to round up and say 0.75 is, it's a little above neutral, but it's not incredibly bearish. We've obviously much higher than that lately. The trend, I don't know, the trend's interesting, and I don't think it's as useful as it used to be, based off of how, these numbers are versus the price action today. But nevertheless, always keep an eye on it. The 10-year did pop. I'm not too happy about that. I kind of wanted to keep that low, mainly because trying to actively sell my house, and figured the lower it goes, interest rates might see a little bit of relief, so give more people buying power. So we'll see. Obviously, what the Fed does will probably affect it next week, but was hoping that it would continue down. So I guess it's basically at 1.87 right now. Gold had a fairly good move. Obviously, oil didn't really react too much after Biden spoke. Forgot what time he spoke. I guess around noon, 12:30, 1 o'clock, whenever he actually ended up coming out. And we didn't really see any follow through. If anything, we saw a little bit of selling. The yen dropped, which I guess is good overall. Normally that's a hedge against our equity markets. A strong dollar, it's kind of a double-edged sword. I'm pretty sure I've said that before. It helps fight inflation, but at the same time, it's not the best for our equity and stock market. So you kind of pick your poison there. Bitcoin, kind of following tech stocks, as I mentioned last video. They have a relief. It follows it. If they're selling, I mean, you could literally copy and paste this chart to the NQ chart, and it's going to look very similar. You can kind of see that action there, drop and then up, and then action and then swoop. So very similar type of price action. Bonds, not really relevant at the moment. That might change. Like I said, depending on what the Fed does and by how much over the next couple months. That's basically it. Nice little move after hours, but I try not to pay too much attention to that. You'll go to sleep, the ES is down 80 points. You'll wake up, it's up 10. Market opens halfway through the day, you're back down like 80 points. Or you go to bed and ES is up 50 points. You wake up, you're down 80 points. So you don't really, unless you're futures trading super late at night, don't want to put too much weight on it. Take a look at two things real quick. I didn't really do too much today. One thing I did do was average down on my short. I know, call me a madman, but when I see this type of action, just straight up vertical action in Chevron, like, look at that. Like, and I always say there's no true way of reading, overbought, oversold, extremes, but if we pulled up the ATR chart and added like a 4 and a 5, this would be at like 5 ATR. Like, that's just such an extreme move. And I try to make a case for this type of price action in the room is if this was a regular stock moving off of good earnings or something, it would not have moved this fast, this quick. But because this is a stock that benefits off the price of oil, and oil keeps going higher, and we haven't retested the 130. I mean, we came pretty close ever since Sunday night when we opened, but as that holds and either holds or and goes higher, a lot of money is piling into these stocks. So I'm not looking for a crash. I'm not going to say, it's going back below $100 anytime soon. I'm just looking for the fact that it's been like 10 days, 8 days, 9 days, whatever it's been outside of the Bollinger Bands, just for it to come back to earth. I'd be fine at the 8 EMA, take a 15-point drop, 14-point drop, something like that. We obviously didn't close near the highs. And it was actually dropping a little more with oil after he spoke. It did drop, I think, back down to like 165. So there definitely was some profit taking, and I assumed that we'd stay down, figuring we'd have a close either under the Bollinger Bands or around it. And then sure enough, oil did pick up towards the end of the day, and it did find some buying, and heck, even up another like 60-70 cents after hours. So we'll have to see. I'm good till May. I'm not really stressing it. I've had a couple times that I could have got out with a profit, but I'm just trying to see. But I'll be the first to say, it could be at 175 tomorrow. It could go to 180. It could be 200 before it slows down. But just every single day that we have this type of action, I just, I visualize seeing that it has to come back down. But who knows when. And that's kind of why I didn't do it for this month or next month. I went out till May to give me some time. But I have the 140 strike, so obviously the further it goes higher, the harder it will be for me to turn a profit since I am out of the money. But we'll see. I'll keep you guys up to date with that. Like I said, I'm kind of doing, contrarian, I guess, approach to this oil thing. Like I said, I still think oil will be front stage and front and center and all that kind of stuff. But I just don't think for a specific stock like an Exxon or a Chevron. I think Exxon, I don't know where it finished. It finished green, but it actually went red on the day for a little while. So not as strong as Chevron. And that's kind of why I chose Chevron, because it has had like that vertical straight up action for literally like 2 weeks now, even more aggressive looking. I mean, you look at all these other candles in time, and other than these gap downs, which was, March lows from 2020, like, you don't see that. Even on the monthly chart going back 20 years, you just don't see this straight up action. Even back when oil was at all time highs, and, I'm pretty sure that's all time highs, if not the last few decades, back in 08, you don't see this type of action. This is just crazy. So I could be 100% wrong, but I just feel that Chevron should have a fairly good pullback. It did. I mean, it dropped almost $10 from its highs, but, obviously when you go short from like 2 days ago, the further it goes against you, though, even if you do end up getting a 10-point drop in a month, you definitely need it to be sooner than later. So that's one trade. The other, why am I blinking out? Voyager, what is it? VYGY. There we go. I know, I blinked out for a second. They add an extra ticker in there, or an extra letter in there instead of just having 3 or 4. It throws me off. But Voyager's one that I like. I actually have them. I don't have much. I traded crypto. I swung it, got out, waited, got back in, got out, and then here I am nibbling again ever since we dropped, mainly in Solana and Ethereum. But the broker I use is Voyager. And we played this from the 11 market back here at the beginning of last year and did very well. Got in at like 11, got out at like 20, and then rinsed and repeat. Bought it again at 15, got out at 20. I think I bought it down, not at $10, like somewhere in 12 or 11. Sold it at like 20. I think it was actually this day that it got up to 20. I put a stop a little above 20, and I'm glad I did. And then it came back down. So I started nibbling in Voyager again at about $7.50 a share. I don't have much. I think I have like 175 shares, but I'm purposely doing that because in this market, you have to just, go with the flow, and it doesn't make sense because they just had their earnings like last week, and they actually turned a profit. You have a company that hasn't been public for more than a couple of years, a growth stock, to go from nothing to being a potential, making a couple $1 million in profit, and it's just not getting rewarded right now. So it defies all logic, and sometimes you just have to step and push against what the market's doing and just be comfortable buying stuff, because if the numbers are there and they have like 10,000% increase in revenue and just the most ridiculous numbers, you know, regardless if it's being sold, it could be algos that aren't even looking at that. They're looking at the volume. There's no volume. It flushes regardless of the numbers. If you plan on holding something like this, and if I like to say this is a pure play in crypto. You don't have to pick the whoopty whoopty coin or the doggy coin or this or that. Like, you play the brokers. I like to use the analogy as you own the racetrack. You don't have to bet on the horse. You're going to make money regardless. So using that type of thought process, if you own Coin or Voyager or eToro, which I ended up getting out of eToro, it took I guess some of these foreign SPACs just took forever to merge, and the price didn't really move. So I just took that. I closed that position. Was it FCTV or FTCV? One of the two. Anyway, eToro SPAC. You can look into it. That one didn't move, but I'm sure once the SPAC's done, it will. Those are some of the pure plays, I guess you could say, without actually having to buy Bitcoin or whatever. But anyway, my point is, unless you got in super low over here at 9 cents, 12 cents before anybody knew what this company was, if we look at this chart, especially in the last 2 years, year and a half, if you say you have an average at $6, I mean, that's pretty darn good, from a 30 all-time high. And this is one that had really, really, really good numbers. So eventually it will get uplifted. They'll probably drop the F. I think it is on the OTC, so that might be another thing that's holding it back. But as soon as this uplifts to the NASDAQ or any of these other ones, like that's a big move. And I think obviously it will be picked up more. But by then, I think not that you missed the chance, but you're not going to buy it at $5 or $6 or $7. So this is one to check out. If you have a longer term, account in a longer term mindset, that you're not going to buy it at $6 and then, oh man, it's at $5. What's going on? No, that means you can buy more at a cheaper price, and that's a win-win. Having that type of mindset and going out a few years at these prices, I feel personally comfortable buying it. That's what I'm personally doing. Obviously, hashtag not financial advice, but that's just what I'm personally doing, because this is a 52-week low today. I think it got down to 580 or something. So anyway, those are the two things, the stocks I bought. I didn't take any futures trades today, just kind of an observe. And overall, my account did the heavy lifting for me. So when overall I have a solid day, I don't feel the need. Not that I ever feel the need to trade, but it definitely makes it a lot easier to not have to force a trade when overall everything you're in is doing well. But anyway, on that, hopefully it's been helpful. As always, you can check us out on Facebook at Off the Chart Trading Group or offthecharttrading.com. You guys have a wonderful night, and I'll catch you guys at the next update.